Greaves Cotton Studio.
Good morning and welcome to Bazaar Morning Call from the CNBC-TV18 Greaves Studio. I am Manoj Singhal, with me Sonia and Prashant as usual, and today is weekly options expiry day, but very interesting market setup. The US market, when I went to sleep, it was up 400 points. When I woke up, I saw it down about 500 points. So 1,000-point fall from the hike. It more importantly closed below the 200-day moving average. As Prashant would describe it, headline trading, right? The first case of Omicron variant found in US, and that was good enough to spook the market. Germany also, by the way, leading a big surge in COVID cases in Europe. Jury is out on whether that's still Delta or Omicron. We'll find out. This morning, Asian markets down but not out, and that's what you can say about SGX Nifty as well. Down but not out. Let's see how things move. In fact, Asia has started to recover. Good morning, Sonia and Prashant.
Hi, good morning. So the headlines are very ominous, right? They're quite worrying, the first Omicron case in the US, etc. But I just want to put a couple of points on the table. Scientists have said that there's no reason to panic just yet. It will take time to determine the performance of the vaccine on the variant. Also, Dr. Fauci, who everyone, of course, tracks very closely, his comments just came out where he said that the person who contracted the first case in the US had very, very mild symptoms and was double vaccinated. So, you need to keep that in mind, that perhaps at the moment, from a health angle, there is maybe no need to panic. But you never know. The WHO has said that they are against imposing a blanket travel ban over the new variant. So that's another thing to keep on the radar. So, Anuj, the big question for me is this Omicron scare the buying opportunity that retail investors were waiting for?
Well, Sonia, look, the issue is 97% cases of corona are mild, right? You don't want to be in the balance 3%. Yes. I mean, you ask those who are in the balance 3% what they feel about it. But look, from the market point of view, I don't know if this is a knee jerk or is this just a virus issue. I think there's something more to it. First, let me go through what our setup is, because today is weekly options expiry. So the market is very delicately poised. If you see the last 3 or 4 days, it can go either way. And I think it will be a really brave person to take a bet on either side. What I can tell you though is that there's a sacrosanct level to work with. 17,100 is where you have the highest put writing, and the closing premium was 40 rupees. You deduct that, you arrive at 17,060, which was also yesterday's low. So if you are an absolute near-term day trader, then 17,064, give or take 15 points here or there, becomes your line in sand. If you are a positional trader, I think this market still has given signs that it's made some kind of a bottom at 16,780. That remains sacrosanct, and that's something to keep an eye on. But the question that I'm asking is that, and US market started to fall before this virus scare. Let's be clear on that. So in that case, has the US market started some kind of a correction? Remember, when last year, the US market, when we had the bear market in 2020, US market was the first to lead to a 200-day moving average, mean reversion. And after that, a fresh bull market started. Has the US market led that move to 200-day moving average on the way down for most global market? I think that is something that we'll find out towards the latter part of December and perhaps first half of January. The bank nifty is already there, by the way. It's defending it by a wafer-thin margin almost on a daily basis. So let's see. But for today, I think it's a bit of a knee-jerk, and it will be interesting to see. I don't know if, first of all, we'll fall 100 points to start, because yesterday was very strong. Even if we do, my sense is first dip gets bought, and then we see. The first hour low normally becomes crucial. If that is defended, then because it's weekly options expiry, perhaps there can be some more short covering as well. But we'll find out. It's going to be a long day. Morning, Prashant.
Morning, guys. No, absolutely. I must say though that markets. Why would the market not expect that the case was already? I mean, Omicron is not already there, right? I mean, for example, in the US, would we assume that that we already have a case here in India, because flights have been open now? Of course, restrictions, etc., are in place. So that's the other thing to ponder over. But markets did fall. I mean, markets. So it's in a way virus headline trading, and it's been volatile and all over the place. So that's essentially what we have. 3% off from the day's high, close to the lowest point of the day. So nervousness, on the edge, looking over the shoulder, that kind of thing. Rates market continue to be choppy. It's very technical focused. We had repeat performances from the Fed Chair Powell in terms of statements, Treasury Secretary Janet Yellen. But markets don't react to the same thing in 2 days of the same thing. The Treasury curve continues to bear flatten. Yields drop though across the curve. The back end of the curve, and this is important for those who are expecting the reflation trade to come back in a strong way. The US 30-year has now closed below an important pivotal level at about between 1.76, 1.78. It's at about 1.74. You want yields going up, not in anticipation of significant tightening, but in anticipation that economic growth actually will strengthen. The opposite seems to be happening for now. And of course, it has opened the door, that at technical level gone, it's opened the door for large extended losses. Oil's down about 2.5%, just under 69. So that's basically the global wrap. It's hard to quantify, especially in the market phase we are in, what every day the Nifty is essentially going to do. But you can broadly have, I think, two levels. One is the market must hold yesterday's low. And on the upside, the level is 17,250, which is the long-term weekly moving average, which I've been pointing to, and which we almost, by the way, got to and then sold off about 40, 45 points. I mean, that is required for confidence to build that this up move that we saw yesterday, at least, is durable. But expect things to be choppy. Sonia.
Absolutely. I mean, choppy is something that we'll have to perhaps live with, right, as we head into the year end. But just a couple of pointers before we kickstart the show. One, I think something that the bulls will like is that the FI selling has reduced. So on an average, towards the end of November, we saw about 3,000 to 5,000 crores of selling from FIs every day. Yesterday, that reduced to about 2,700 odd crores. There was more buying from DIs which came through. So that's good for the bulls. The other thing is the auto space could continue to be a bit lackluster because the sales over there, especially the companies that have a rural focus, is under a lot of distress. Hero Motor reported a 40% drop in sales. All tractor makers have reported steep falls over there. There's been delay in harvesting that has hit the rural market. So I assume or I expect that pocket could continue to be under pressure, perhaps for the next month or so. But those are a couple of pockets to look at. For now, the SGX Nifty is indicating that the start could be in the red because of what's been happening across the globe. Well, let's kickstart the show and get you a lot of opinion. We have some big market voices coming through as well. First up, on the equities front, Chetan Seth of Nomura says a likely resurgence in COVID cases alongside an increasingly hawkish Fed are near-term risks for stocks. The emergence of the Omicron variant likely leads to even more uncertainty, and thus they think some caution is warranted until more clarity emerges on how this variant affects mobility, growth, inflation and the policy mix. Even before the emergence of this variant, new cases of COVID were already surging in parts of Europe and the US, and this new variant is adding to that risk.
Okay, let's get to some money market views then. Kunal Sodhani of Shinhan Bank says the US Treasury yields and inflation expectations fall amid mixed signals from the Fed. The dollar index continues to hold on to support of 95.5, while 96.3 is resistance. For the dollar rupee pair, 74.75 to 74.80 acts as support, while 75.20 is a resistance.
And on the bonds, Ajay Magnolia of JM Financial says that market and participants are looking for cues and commentary in next week's policy from the RBI and the Fed meeting this month on its urge to fight inflation while keeping growth support amidst the new risk of Omicron. It is a challenging task and rates may have an impact but will stay sideways till then. 10-year GSEC is likely to trade in a very narrow range of 6.33 to 6.38% today.
Okay, it's all about the worldview today, isn't it? Nigel is here with more. Nigel, hi.
Well, it was U-turn on Wall Street yesterday. The Dow was up close to 500 points at one point of time. It ended with a sharp cut, down close to around 1,000 points from the day's top. But it's not only been about the three frontline indices. You need to keep an eye out on the Russell 2000. We have been highlighting the fact the last couple of days as well, even when the markets ended at the high point of the day, the Russell 2000 didn't really participate. And yesterday it took a harder knock. It was down close to around 2.5% odd. The problem was that the CDC went ahead and confirmed that there was their first case in the United States, though the symptoms were mild. In California, that's where the first case was reported. And on the back of that, we did see selling on various stocks. So whether you talk about the unlocked trade, some aviation-related stocks, Boeing was under some pressure, even cruise liner stocks did get hit, as was the case with some of those retail stocks, all of them down anything between 4 to around 8%. We're waiting for the non-farm payrolls data that will come on Friday. But for the timing, we had the ADP data. That's the ADP private payroll data, and that appeared a little bit better than what the street was working with. Came in at around 5.3 lakh odd. The European markets, well, they closed up before that first case was reported in the United States, so they had no worries. They ended well in the green. And in terms of other asset classes, the dollar index had moved to around 96.5. That's cooled back down to around 96. You've seen a sharp decline that we've seen on Brent crude prices. Well, Asian markets started off on the back foot, but they've pulled back considerably from the low point of the day. The SGX Nifty, though, indicates, for starters, we could be starting off with a cut of around 100 points. Back to you guys.
Okay, Nigel, thanks a lot for that. 17,145 is what the SGX Nifty is indicating. So let's see how the actual trade pans out. That would be somewhere around 80-point downtick if you go purely by the futures trade. Adrian Movat is joining us, the emerging market equity strategist and a veteran in tracking these emerging markets. Adrian, good morning. Thanks for joining us. Is it just the virus, the Omicron variant, or is there something else that seems to be bothering the market? The US market, for example, is now below the 200-day moving average. Your thoughts?
Yeah, I mean, we're below the 200-day moving average, but only about 4% off our sort of intraday high. The key to me is not so much the new variant, it is the comments coming out from the Federal Reserve. Powell was confirmed as President Biden's choice last week and seems to have changed his rhetoric. So they've dropped this word transitory and now seem to be moving the balance of risk much towards inflation. Earlier, you were reporting on the very strong ADB report, just indicating how many jobs are being created in the United States. So Powell's testimony yesterday talked about labor inflation, wage inflation. And if inflation is to become more stubborn and entrenched, it has to come through the labor market, not through oil, commodities, etc. And I think it's hinting towards that that's concerned the market. Your colleague was also commenting earlier about the shape of the yield curve, with yields at the longer end coming down while shorter yields are moving up. This is implying that the market is becoming more concerned about a hawkish Fed, one in which the Fed starts to lower growth, and that's why longer-term rates haven't been moving up in the way that the shorter-term rates are moving up. So to me, it's very much about the Fed and it's about inflation. I think the issue with regards to this new variant is, first of all, it shows how good the scientists have become. Very, very rapid reaction from the scientists in South Africa highlighting this new variant. We've had some prudent measures put in place in terms of reducing travel, which hopefully is a short-term thing. There are some anecdotal evidence that this variant is perhaps less troubling in terms of health outcomes. Let's see if that's the case. But remember, today is very different than 12 months ago. 12 months ago, we did not have vaccination. We have very successful vaccines. There were speculation early last year when there was a new South African variant back then, the Alpha variant, that it wouldn't work against, that the vaccines wouldn't work against that variant. That proved to be misplaced. So I would be optimistic when it comes to the COVID story. I'm a little bit more anxious when it comes to US inflation. And I think perhaps that's the dominant issue for markets. So if you look at the US equity market, up 20% this year, outperforming most other markets, remember, very large weighting in that market is tech-enabled industries. So what do I mean by that? I mean your Apples, your Facebooks, or should we call it Meta these days, Amazon, Tesla, etc. And those expensive growth stocks like to have low discount rates. And so the threat to those is if inflation is more persistent and rates move higher, then you get a P multiple compression. I'm less worried about cyclical stocks in the US, commodities, energy, even financials, as they're a relatively small percentage of the market, and I think would be marginally winners out of this situation.
You know, even before Adrian, hi, good morning, Prashant here. Even last week, right? I mean, there was talk whether the Fed would sort of go back in term and not do taper, not sort of effect rate increases starting next year. But I mean, these are definitive comments we've seen. So when you say that the driving factor for markets from here is going to be the Fed, would you imagine that the Fed now is a lot less data dependent? Its mind is made up that inflation is here to stay and we have to act. So rates are going up in that sense?
Yes, I mean, it's an interesting question. Are they still data dependent? I'm pretty sure, all economists and economic watchers are data dependent. The PCE deflator at 5%, last time it was this high was back in 1982. So there is data out there that the labor market is tight. We've had sort of record number of people resigning from jobs in the United States. There's an opportunity to upgrade your pay. And I think the Fed is looking at that type of data. The other thing for the Fed to look at is simply that household balance sheets are very healthy. Income growth is strong. So the consumer is robust in the United States. And the House has just passed a very big spending bill. So we have both demand coming from the household sector as well as from the government sector in the United States. And when you look at those things, maybe we don't need an accommodative Fed. And it could be that Powell is doing us a bit of a favor in quickly moving away from using this word transitory, saying that they are concerned about inflation. Let's stop expanding the Fed's balance sheet, perhaps bring forward a few of the rate hikes. And if we can then end up with a much more balanced policy where you have fiscal stimulus, strong household sector, and a less accommodative Fed, that might be a better story for a long-term bull market than one in which the Fed remains too accommodative and you actually stoke more inflation.
Sure. Adrian, hi, good morning. So, let's talk about India particularly, right? Because we also have this inflation scare. It may not be as bad as what's happening across the globe, but wholesale inflation, for example, has hit a 5-month high in India. We've had high energy prices, high vegetable prices, but none of that has impacted the markets just yet. Of course, we're down about 10% from the all-time highs, but perhaps that we were ripe for a correction. Do you think it's just a matter of time before this macro concern, catches up with the market? And how do you approach India in the first part of 2022?
So I think it's very difficult for the RBI to address some of the specific inflation issues. You had a news story earlier about how weak tractor demand has been because of issues with the harvest. That's not something a central bank can deal with. We've got a relatively stable rupee. It's been in quite a tight trading range this year. So the wholesale inflation is coming through because commodity prices have risen a lot and the oil price has risen a lot. But then let's have a look at commodity prices. The oil price has come down meaningfully in the last couple of weeks, as have things like iron ore from its high a few months ago. Copper, I'd also throw into that, less of a decline than we've seen with iron ore. So on a forward-looking basis, I think the Indian central bank can maybe be a little bit more sanguine and it's easier for them to articulate why this spike in the wholesale price index will moderate looking forward.
All right. Well, we will leave it at that. We've actually run out of time, but it was a pleasure speaking with you. Thanks a lot for joining us.
Thank you.
And helping us wade through all the data that we're getting. Let's slip into a short break for now. The SGX Nifty is indicating that the start will be in the red. There are global concerns, definitely, but how do you approach it back home? Our list of top 10 stocks lined up with our entire research team in just minutes from now. Welcome back, folks. For now, the SGX Nifty is indicating that after a big rebound yesterday, we're headed for some more turmoil today, down about 90-odd points. But our research team is here to help you with all the top stocks to focus on. So let's get straight to that. Anuj, what are you looking at today?
Well, Sonia, metals, from being the strongest pack, it's become the weakest pack. But, stocks are now close to 200-day moving average, in some cases below that. So I want to see the reaction in names like Tata Steel and JSW Steel. Also because, these markets are very, highly correlated to what's happening with the global cues. So Both these names will be interesting to see. These are the stocks that I'll be tracking. But you'll be tracking the auto sales. How are they looking?
Particularly two companies, Hero and Eicher, because they came out with their numbers post-market hours. On the two-wheeler front, Hero has reported a massive fall. It's a 40% year-on-year fall, as I was saying earlier. Motorcycle sales down 40%, scooter sales down 60%. It's just indicative of how the rural market has still not recovered. Inventory levels are very high at almost 6 weeks, and the management in their own admission has said that the delay in harvesting because of the late impact of the monsoons has impacted demand. They are expecting a swift revival in the fourth quarter because of encouraging farm activity and a pickup in the wedding season. But if this Omicron variant spreads and then once again, there's a hit in demand, then they could struggle to recover, is my sense. So I'm going with red for Hero. Even for Eicher Motors, Royal Enfield sales have been under pressure for the last couple of months. This time around is no different. It's a 19% fall that Eicher has seen in the Royal Enfield sales, coming in at just about 51,000 units. And don't forget, even Bajaj Auto reported a 20% fall in domestic sales. So this entire pocket, I expect, could be under weakness today.
Hero especially, very weak numbers, as you pointed out. Dish TV and Bharti should be in focus. Some reports as far as potential M&A goes. Rima, over to you.
Thanks so much for that. So Mint reports that Bharti is in early talks to acquire a majority stake in Dish TV. So here is the process that they're looking to do. So first, according to reports, that they've already made an offer to the promoters of Dish TV, that is the Subhash Chandra family, to acquire their near 6% stake at a price of 20 rupees, which is at a premium to where Dish TV was. If the promoters, that is the Subhash Chandra family, agree to sell their 5.9% stake to Bharti Airtel, then Bharti Airtel is likely to approach Yes Bank, which has a 25.6% stake in Dish TV. Once these two transactions are concluded, then Bharti Airtel will reach out to the other shareholders. The eventual goal is to acquire a majority or a 51% stake in Dish TV. This is what reports are suggesting. So as of now, Bharti has made an offer to the promoters of Dish TV, that's the Chandra family. They have not acquired. No discussions are ongoing with Yes Bank. But as you can imagine, this is a very complex deal. So, as the article says, that while the discussions are on, whether it will fructify or no is very hard to say. CNBC-TV18 has not independently verified this news and cannot vouch for its authenticity. Back to you.
Okay, Rima, thanks a lot for that. Yes, it will be interesting to see how the stocks react, Dish TV in particular. But let's get back to Ekta. She'll be watching out for some pharma stocks as the Omicron fears are back. Ekta, good morning.
Hi, morning Anuj. Well, obviously you all have been talking about how the US market sold off. So the US has confirmed its first Omicron case, and the first case was in California. So just want to point out that the usual suspects within the pharma and the healthcare space should probably be in the green. The likes of Cipla, which has one of the largest COVID-19 portfolios, Divi's Labs, which is also an API manufacturer for Molnupiravir, Cadila, which has a vaccine under its belt, and the likes of Pfizer as well, which has a potential drug as well as a vaccine, and obviously the likes of the hospitals such as Apollo and Dr. Lal's, which would be a diagnostic company. And just to point out, travel and leisure stocks as well as the unlocked trade stocks would probably be in the red today.
Okay, thanks a lot for that.
I have an important question. Is it Omicron? Is it Omicron? What is the right?
Omicron. I did the search this morning. I checked this morning.
So how you say, oh my God, Omicron. That's the kind of effect it has to have.
This is some early morning gallows humor.
I was in the makeup room and they were discussing it on our sister channel Avaz. So I also did Google search and then saw the pronunciation. So it is Omicron.
Omicron.
So, and I hope we don't have to. We're laughing about it right now, saying, "Oh my God."
Light of it, but absolutely hope that it just stays there as a name and not really all around us.
Okay.
Go on, Sonia.
Well, Agam is with us. Thanks, Ekta, by the way, for pointing out all of those stocks in focus. Agam is joining in to tell us about some more stocks that are in the news. Agam, morning.
Morning. Well, I start off with two companies in the mining space. Firstly, NMDC, where we have numbers for production sales for the month of November, and this is to do with iron ore. It's a subdued month. Production is up only around less than 0.5%, and sales are actually down by as much as 12.7%. So watch out for that. But Coal India, on the other hand, well, the numbers look much better off because the coal production is up as much as 4% for the month of November, and its offtake has also risen nearly 11% on a year-on-year basis for the month. Moving on to GMC Projects, it's won a handful of projects worth around 1,795 crores, and these projects are from the water supply as well as the buildings and factory segment. And finally, coming down to RITES, this is where we've seen cancellation of execution on certain new lines which were planned. These lines include Belgaum Dharwad, Shimoga Shikarpur, as well as Tumkur Devnagari. So perhaps could see some sentimental decline for RITES on the back of that.
Okay, Agam, thanks a lot for that. Let's go across to Nupur then for some more stocks and news. Nupur?
Well, Anuj, let me start with the Raymond. The stock is up 7% so far this week. And now we have a piece of news that board approves listing of engineering and auto parts business, which is under its wholly owned subsidiary JK Files and Engineering Limited via 800 crore IPO. This IPO will be pure offer for sale through book building process, which will help deleverage Raymond. Engineering and auto parts segments of 47% revenue growth in first half of this year. Do note as well, latest data, the company has debt of over 1,500 crore. Moving on to the Atul Auto, where company saw 16% decline in sales for the month of November. Positive news coming in for Global Spirits as company gets order to supply 9.68 crore liters of ethanol via tender floated by OMCs. And lastly, Mahindra Logistics as company along with Logis Logistics to develop 1.4 million square feet of multi-client BTS warehouse in Delhi NCR. So positive news coming in there, green out there.
Nupur, thank you very much for that. Now to the stock which was, all the talk in the last 30 minutes yesterday. Vodafone Idea surged 15%. Actually at one point went up more. All kinds of buzz about what could be potentially happening there. But we have picked up that the Supreme Court essentially is going to pick up the matter of one-time spectrum charge. Ashmit is joining in to tell us more the background, the context, and where it goes from here in the courts. Ashmit, over to you.
Well, the one-time spectrum charge case has been a legacy issue that's been affecting the sector since way back in 2008, that time when the government had decided that it will retrospectively levy one-time spectrum charge on spectrum holding beyond a certain limit. That issue has been under litigation for the last 10 odd years. Having realized that, the government, we understand in the previous hearing, in fact, had mentioned before the apex court that this is one issue that is plaguing the sector. This is the one issue that stacks up to a demand of about 40,000 crore rupees if one were to include interest as well as the principal amount of the demand that was levied. And finally now, the government said that this is time now for the government to reconsider whether or not it wants to push forward with this litigation and push forward with the demand for 40,000 crore rupees. Now, that's what they said at the previous hearing and had said that subject to cabinet approval, they will be coming before the apex court and clarifying whether or not the government has decided on withdrawal of that demand of 40,000 crore rupees. So that's critical here. This hearing is scheduled at roughly around 10:30 a.m. this morning, and that's perhaps when we can expect more clarity from the government on whether a decision has been made, a formal decision has been made to withdraw that demand of 40,000 crore rupees. Needless to say, that will be a significant relief going in for listed players such as Bharti as well as Bazaar.
Absolutely. And in anticipation of that relief, Vodafone was up, about 16% yesterday. But remember, it's a penny stock. It's a small ticket stock. So, the gains also look quite large when it rises. But, of course, 10:30 is the big, 10:30 is the time when we'll get to know more. So we'll go back to Ashmit for that. Here's a quick recap of our top stocks in focus. Stocks with positive news flow today: Dish TV, Yes Bank, Bharti, Cipla, Divi's, Cadila, Pfizer, Apollo Hospitals, Dr. Lal, Path Labs, Coal India, GMC Projects, Raymond, Global Spirits and Mahindra Logistics. While stocks with negative news flow, definitely Hero, Aisha, Inox, PVR, Interglobe, Lemon Tree, NMDC, RITES and Atul Auto. All right, let's get a quick handle on what's happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action there. Manisha, good morning.
Morning, Sonia. There are a couple of things that I would want to watch in the market today. One is the OPEC and allies meeting and the announcement from there. And ahead of that, also we have seen the crude oil prices continue to decline. Well, you're looking at sell on every uptick, every rally in case of crude oil prices. And as we get closer to the $70 per barrel mark, we keep coming down to 65, 66 kind of levels. And the closing yesterday was the lowest in last 7 months for the crude oil prices, hovering around that range as the OPEC and allies believe that we are looking at global supply excess for the whole first quarter of 2022 really seems to be weighing onto the crude oil prices. In the metal space, there is a bit of a buying that we've seen in aluminum and nickel. That is as there is a report available saying that the countries are on track to reach their EV targets by 2026. No such luck for copper, though, which continues to be under pressure, as Codelco has warned on lower prices, higher supplies for most of 2022. That seems to be weighing on that metal.
All right, Manisha, thank you very much for that. So that's essentially copper and industrial commodities in focus. Let's just take a very quick look at what the SGX is doing. We're about 30 minutes out from the pre-open session, 45 from the market open, and there's a lot to talk about and run by our guest who will join us in just a bit. Mehraboon Irani is our guest on the show. The SGX is down a little bit, about 67, 70 odd points, 17,178. So we'll sort of put the market, Vodafone Idea and a bunch of other stocks to Mehraboon, who joins us in just a bit. We'll also, of course, connect with the management of Greaves Cotton as the company invests 700 crore rupees in a new EV manufacturing unit in Tamil Nadu. That conversation lined up as well.
Welcome back. The market is seeing a bit of a decline, the SGX Nifty that is, but it will be interesting to see. It's actually cut back quite a bit of losses. It's now only indicating a 40-point downtake. Mehraboon Irani is joining us. Mehraboon, good morning. One of your loved stocks has started to correct in line with some of the other, sort of opening up trades, Delta Corp. I mean, not just Delta Corp, but other stocks like Indian Hotels and, these kind of stocks. Do you think it's another buying opportunity, or would you want to wait and see how things evolve?
But it's difficult to predict as to how fickle the mind of investor or a trader in the market has become. You talk of third wave of fourth wave of a COVID variant in South Africa, and more than South Africa, the world gets split up. It is because the markets have gone up a little bit too sharply, especially Indian markets, which is just a reflection of the US markets. And if we have to fall or correct for other reasons, now the South African variant became an excuse. And because of that, all the stocks, which are the opening up of the economy stocks, unlocked stocks, that's the way we put it, hotels, restaurants, leisure, travel, and of course, the casinos, the gaming industry. I think those stocks suffered. Is it a buying opportunity? I certainly believe the answer is yes. Now, God forbid, if we have some more problems on the COVID variant front, which as per reports doesn't seem too likely, but then we all know how the markets are behaving right now. Another 5-10% fall, bigger opportunity. But even right now, if you are buying and not bothered about another 5 to 10% downside, I certainly believe Delta Corp is a stock to be in, certainly from the longer term angle. And don't forget, there were reports, which I think your channel also was stating along with a lot of media houses, that the online gaming also, some development could happen. And as and when it happens, that could be another big trigger. And we also know the integrated township, which is coming up in the other part of Goa, which is not yet developed. But Delta has huge land reserves. And a lot of things are going to happen on that particular front. So some unlocking here and there of its assets, getting cash, which is going to use for future asset building. I think that is one trigger, but the market as of now is possibly liking to ignore. But as and when the market comes to know about it, gets the grasp of it, I think Delta could have its next upward move.
Mehraboon, hi, morning. That is essentially, that's your pick in that space, that unlock kind of space, or overall? I mean, is one of the top stocks you'd buy right now in the market? And that 5 to 10% that you spoke about, was it for Delta or for the market?
I was referring to Delta also, along with the market. See, the unlocked stocks have faltered a little bit faster than the rest of the market in the last 10-15 years of volatility, which we have seen, mainly to do with the South African COVID variant. But on the whole, the markets needed to correct, Prashant. And I think you have been asking these questions to all the experts that you have come across. And that has got more to do with the fact that India and the US, the two markets, have really outperformed relatively very smartly to the other markets. And the markets needed an excuse to fall. The question is it inflation ultimately? Is it the accommodative stance of the central bank? The tapering going to happen in US? The shot from the bolt, which could come from the RBI, where the accommodative stance, they will say India no longer needs it. And I also believe India no longer needs the stimulus continuing. So if there is a rate hike coming earlier than expected from the RBI, I think that could be the reason. So market somewhere, the noise on the variant front, I call it the noise. I think somewhere, hopefully the market will adjust itself to some unpleasant surprises coming because of the sticky inflation globally as well as in India. And don't forget, next 4 months, we are going to see at least 3 elections coming. And inflation is certainly not a factor with which the ruling party would like to go into the elections.
Okay, there is an entire pocket that is doing quite well lately, this entire electric vehicle, ecosystem. And Greaves Cotton is one stock I think, Mehraboon, you track closely. So I'm going to invite you to listen into this conversation. We have the management with us. Now, Greaves Cotton has recorded a very strong growth in the electric mobility division in Q2 FY22. They have products in the 2 and the 3-wheeler space, and they are now looking to strengthen their EV portfolio with a range of new electric vehicles. They've committed an investment of up to 700 crores in their new EV manufacturing unit in Tamil Nadu as well. Nagesh Basavanhalli, the Group CEO and Managing Director at Greaves Cotton, joins us now to talk about that. Nagesh, good morning and thanks for being with us on CNBC-TV18. The Q2 performance of the electric mobility segment was astounding. I mean, over a doubling of, growth on the revenue front. Tell us a little bit about the demand trends right now, because there's so much competition in this space. From March 2022, Hero MotoCorp will also be launching its EV products. So tell us about the demand trends and what kind of growth do you see for Greaves?
Yeah, first of all, thank you for having me on the screen. Like you said, I think we were one of the serious players who got into this segment almost 4 years ago, right? As part of our fuel agnostic strategy, right? So when it comes to two-wheeler and e-rickshaw electric and now three-wheeler electric, right? We play in that 80+% market of that last mile mobility. So the product offering is quite wide, right? In terms of the two-wheeler itself, very fortunate to see the demand. Almost 40% of our people are first-time buyers to two-wheeler mobility. So yes, we see very credible competition coming in and we respect them all. But we have our game plan, which is focusing in on what we do best, which is provide uninterrupted journey in the last mile segment. And yes, we are seeing increased demand, and hence we've added capacity too in the recent, as announced with the recent Ranipet plant.
So can you just give us some numbers? You're seeing increased demand. In your press release, you mentioned that you sold about 7,500 units in October. Can you give us some numbers? I mean, what does this compare to, say, 6 months ago? And what is the average run rate that you can do in terms of sales over the next 6 months?
Yeah, so great question. While I don't want to predict the future, I'll definitely give you some indicators. Like you said, Q2 to Q1 or Q2 to year over year, you've seen the growth, right? With our offering of products and capacity increase, you're going to continue to see that trend that you've seen in the past couple of quarters, right? Point number one. Point number two, we recently launched a new product called Magnus EX, which has over 120 kilometers range. The which has been pretty much has a 8-week wait period. My over several thousand dealer applications are pending with us. So we are available in about 400 towns pan-India. So when you look at some of those, and now with the advent at the e-rickshaw market at the bottom of the pyramid, plus the three-wheeler through the MLR, we believe now we're going to be playing in a wider portfolio of the market, right? And that's why I said 80+%. So that's kind of how we see this evolving. Definitely strong. Two caveats that I want to alert. Supply chain, everybody understands the supply chain challenges. We are no different, so we are dealing with it, and that is something that needs to be watched. And as we transition up to our Ranipet facility, I think the next 2-3 months we'll have to watch just to make sure that the facility is coming up to speed, because we're going into a brand new plant, right?
All right. Nagesh, hi, good morning. Prashant here. Would you be bringing in a partner for the e-mobility venture?
Good morning, Prashant. Like I think we have said it in our last analyst call. Yes, we are open. We are growing rapidly. The group has invested, like you pointed out, 300 crores already, and we have committed another 700 crores into manufacturing with the Tamil Nadu government, right? So yes, we are open for like-minded partners who share our vision of being in the last mile mobility, providing the journey, providing.
Nagesh, are you open, or are you looking out actively? Have you appointed someone to look for a partner?
We are discussing. There has been a lot of interest from financial investors, and yes, some of them are talking to us.
And what kind of valuation benchmark should be? I mean, so the monthly revenue run rate is about 60 crores, right? from the
so
business?
you can say roughly, Prashant, absolutely right. We took over the company 3 years ago, roughly at about 2.5 million ARR, US dollars. Today we are about 100 million US dollars, right? Just like you said, right? In that range, right? You do the math. You guys are smarter than us. At the end of the day,
That's a
lot of interest.
That's a good way not to answer the question.
The valuation is something that I think.
How much are you looking to raise? How much are you willing to sort of give in terms of equity for what you want?
So we're looking for a minority partner who can come in, who can bring in money plus, i.e., in addition to the money, be a partner to us as part of this growth in terms of either markets or technology. So yeah, I think, like I said before, there's very strong interest.
Okay, very strong interest. This 700 crores that you're investing in your Tamil Nadu facility, how are you funding that at the moment? Is it largely from internal accruals? Are you looking to raise any debt? Or will a big chunk come in from a financial partner?
So it's probably a combination of the above. So as you know, it will go in phases. What we have said is immediately on day one, as of this month, I have capacity to get to 120,000 units a year, which can easily scale up to 250,000 to 1 million. The brick and mortar is ready for 1 million units, right? I just need to scale it up. So as we are going through the various tip levels and adding incremental capacity and we are in-housing some stuff over a period of the next 1 year. We will be adding the manufacturing capex over the next couple of years. Remember, the 700 crores that we had announced was over a period of 10 years. So there is a timeline to this, and there is a phased rollout, and money will come either from internal accruals or from the external partner as and when the external partner comes in.
Okay, just one final question from my end. You have made 2 acquisitions recently in the e-3-wheeler segment. So I assume that you're expecting big demand there. So you acquired 26% stake in MLR Auto and in Bestway Agencies. Any more acquisitions that are lined up over the next 12 months? And if yes, which is the segment that seems high growing for you?
So clearly, I'll say we're always open for both organic and inorganic options. So we're not ruling that out. But whatever we do will be in the last mile segment to create more technology modes and create a more competitive edge. So that would be the space that we would be in, 2-wheeler plus 3-wheeler.
Okay, Nagesh, thanks a lot for joining us and good luck. That's Greaves Cotton. Mehrbun, have you tracked it? Any thoughts here?
I have been positive on this company. I think the management has walked the talk always. A very old company. Question right now is basically the Rani part. The Rani Pet, Tamil Nadu plant, which they are talking of starting by end calendar 2022. They will require money for that, and certainly somewhere I personally believe, I don't have any information on that they would have it possibly worked out the financing, because it requires a lot of investment. For a company whose profit and loss account right now doesn't look very good at the moment. The point is going on acquiring market share, talking of 1 lakh units coming. I think this is a company to possibly move around with, observe it, and possibly invest in it as and when developments keep on happening. Recently, the company has strengthened its E3W business. Subscription of 26% they acquired in MLR Auto, which is a company in cargo as well as 3-wheelers. Apart from that, it has acquired a 26% stake in ELE e-rickshaw. So I think if you ask me, a company which it is a company which has continuously transformed this business and done it quite well over the years. It was a company which started with 2-engine, 3-engine for 3-wheelers, went on progressing itself, went ultimately to light commercial vehicles also. To Greaves Cotton over the years has been a company which has performed well, done whatever it has stated. A little bit of an ambitious project coming up as far as Tamil Nadu goes, considering the capital outlay we need. But I think EV is a segment which is right now in the trend, and I don't think Greaves will falter in any way getting the finance for the particular project. Okay. I think this is a company which is possibly an early entrant in its way, in a sector in which market men are very interested in, and a sector which can only keep on growing from here. So Greaves at the present level, as far as the stock price goes, possibly is discounting a little bit of what is happening at the company level. But from an investment angle, certainly I feel the upside is very much there in the coming quarters.
Okay, Merbon, stay on. We need to take a break. We'll come back and discuss market technicals with Sudarshan Sukhani and Mitesh Thakkar. Welcome back. Weekly options expiry day today. The SGX Nifty is now indicating that we'll have a weak start, but not by much. In fact, for all you know, will be interesting to see by the time the actual open happens, if Asian markets also start to recover more. Dow futures are already in green. Whether the market actually sort of shrugs off this last hour weakness in US. Sudarshan Sukhani and Mitesh Thakkar joining us. Good morning, Sudarshan. Is there a trade? The long trade worked yesterday. Do you think that same trade works today, or is there a different trade?
Yeah, good morning, Anuj. I think the same trade will be taken today. See, yesterday's sudden decline in the US markets was probably a knee-jerk reaction to that news of one case being found. We all understand that these cases will be found everywhere. So perhaps that was an overreaction. Obviously, I'm not competent to say it was. I just think so. Now, the Nifty itself was in a narrow range yesterday. I think buying is possible and suggested if it crosses 17,200, which means let it show some strength during the day or in the early hours. If it does that, I would be a buyer in the Nifty. I'm not looking to short sell.
Interesting point. Remember, yesterday Sudarshan said you wait for a dip because there was a gap up and then you buy. Today he's saying that let it cross 17,200, show some strength and then buy. So just note that point. Mitesh, good morning. What's your index trade?
Good morning, Anuj. See, yesterday, I think finally there were some signals that the market might be settling down with a couple of volatility indicators turning flat. So broadly, I think it will be a choppy range-bound kind of a movement. I think my initial understanding is 16,980, 16,950 on the downside, about 17,300, 350 on the upside. And in case we have one break below 16,980 zones, then I think a retest of that, the panic low which was done on Monday, which is 16,780, 800 zone could be tested. But I think the big declines may not happen immediately. So it will be a choppy market, but a ranged market. The idea should be to deploy range strategies. I think try to buy closer to 16,980, 17,000 support area and try to sell close to about 17,300, 350 zones.
17,300, 350 zone is a sell zone. Mitesh, what about stocks?
Anuj, a mix of buys and sells given that the market will be more sideways. So I have 2 buys to 2 sells. On the buying side is TCS around 35.65, 35.70, about 8-10 points lower, can be bought with a stop at 35.44 for targets of 36.20. Chambal Fertilizers is a buy with a stop at 390 for targets of 410. And on the sell side is Dabur, keep a stop at 582 half, look for targets of 560, while ACC is a sell with a stop at 2275 for targets of 2200.
Okay, Sudarshan, your stocks and also your view on the Bank Nifty, Sudarshan.
Bank Nifty could actually outperform, Anuj. What happened is, see, the Nifty made a large base in the 15,500 area in that May, June, July month from where it broke out. So that's a strong support and we are far away from that. But for the Bank Nifty, that level was 36,000 and we are already there. So it is possible that, see, both indices could bounce up and down, but the Bank Nifty could actually find support at current levels and outperform in the short term. And the stocks are, again, I have an all buy list. One of the reasons I usually have a buy list, Anuj, is because the natural tendency of the markets is to go up. So, going short is to fight against the natural waves. Navin Fluorine is a buying opportunity. The stock had a minor decline, then it chopped around with wide ranges. It has broken out of a trading range. Consider buying with a stop under 35.20. Then I have Tech Mahindra. It's outperforming the Nifty and outperforming the IT sector, both, which is saying a lot. It's not broken out of a trading range, but it's at the top of that range. It could and should break out. Consider buying with a stop under 1550. And finally, I have a stock that usually doesn't come in my list, Laurus Labs. It went through a bear market of its own when the Nifty was rallying. Now there are signs that it is bottoming out. That's a difficult process, but it's worth buying into with a stop under 495.
All right. Thanks a lot for that. By the way, a lot of the Asian markets are now in the green, so don't lose sight of that. I think the Hong Kong market was up about 90 odd points the last time I checked, and a couple of others also looking pretty good. There you have it, a green across the screen. But let's get Abhishek, my colleague, in. This is the Momentumizer segment, so let's find out what's on his list. Abhishek, over to you.
Well, Sonia, I have IndusInd Bank on my radar. The stock has underperformed Nifty in last 1 week as well as last 1 month. So it's down about 2.6% in last 1 week versus Nifty down about 2.1%. Over the last 1 month, the stock is nearly down about 24% when compared to 4.25% losses that you have seen on Nifty. So volume data is very interesting. You know, the daily trading volume of yesterday is the highest in last 16 trading sessions. So it has increased in last 16 trading session by about 1.6 times from 831 crore to as high as 1,352 crores yesterday. The delivery volume was also healthy at 31.7%. You take a look at the technical level, the stock is priced around 933 rupees, which is down in terms of all the key technical level of 20 DMA, 100 DMA and 200 DMA. Back to you.
Okay, I mean, IndusInd, let's see if it manages to hold, but what a fall it has had because of markets and of course because of individual issues that the bank has seen as well. Other banks have gone one way, IndusInd has gone the other way, and that's shown up in the stock price performance, but about 6% yesterday, and Abhishek pointing out data. We'll come back after a quick break, pre-open of course, and of course also a quick word from an expert on auto sales numbers, Ashwin Patil of LKP Securities, who will tell us what to do with auto stocks from here. Back in 2.